I'd like to continue today with control accounts, and in particular reconciling the list of balances with the total as per the control account, as is done every month, every year, depending on how frequently the company wants to do it. So what I'd like you very much to do, please, is to, just as a quick recap, think about how the system works. Now, you will remember that the individual invoices are entered in the day book, the sales day book, for example. So you have little individual T accounts with A, B, C, D, the various customers. Remember, these are all credit customers. You must not bring in a cash transaction. So if there's a cash sale, the examiner tries to trap you with a cash sale, you must stand back and not bring that in. Put a cross beside it and avoid it. So it's only credit sales. So let's go back. The individual invoices are listed in a sales day book, though each item sold to each customer, customer A, customer B, customer C, customer D, are entered in little T accounts in the individual ledgers. In other words, you have a book with a single page for each customer. Now, those items are eventually added together and a total of the list is worked out. That is then compared to the control account, which of course is the total of the sales day book, periodically, once a week, once a month, whatever it is, posted to the control account. So for example, if there's only one transaction or one kind of transaction, the sales day book added up will enter the debit side of the receivables control account, but individually the A, B, C, D accounts are entered with the individual sales invoices. So obviously when you add up the individual sales invoices, you should have a total of 4 debit items, and that should exactly equal the control account total, which is obviously a debit item as well. Now, that's one level. The other thing that happens, of course, is if you receive money from these customers, they are individually entered in these little T accounts, but in total, they're entered in the control account. So once more, if you do a summary, total, periodically, let's say at the end of the month, the individual totals will equal the total as per the control account. Now, we speak here of sales day books. Obviously, you could have a purchase day book as well, in which case it goes the other way. For example, the items are entered into the individual T accounts for each supplier, and of course, the total of the purchase day book goes to the payables control account. So that'll be predominantly a credit item. So that's all it is, really, a very, very easy topic indeed. But the biggest thing to understand is, in total, it goes to control accounts. Individually, it goes to these little T accounts. And of course, if you've done your accounting right, it's bound to reconcile. Of course, in the exam, it never reconciles. Or shall we say, when the question is presented to you, it's given to you as an unreconciled situation, and what you've got to do is to somehow reconcile it. Because in real life, that does happen. Someone is posting an item, putting it on the debit side, a phone call comes through, he or she picks up the phone, chats away about various things, comes back and puts it on the wrong side. So instead of putting it on the debit side, she puts it on the credit side, and vice versa. So little things like that do happen. Or they have a break for lunch and they come back and start it off on the wrong side of the account, or whatever it might happen. So there are interruptions in everyday life, too much sometimes, I think, and that causes error. Or the person might just make an error. So what we are expected to do as experts is to come along and sort out these problems. So essentially, a very easy topic. The examiner loves this area. Nicola Ventris, the examiner, she examines it regularly. So what I'd like very much for you to do is come with me through a question as we try out this exercise. So if you turn with me, please, to page 52. this is where I would like to begin to explain. So if you look at the screen on page 52, normally at the end of each month, we check to ensure our control accounts reconcile to the individual balances on our ledger accounts. So it is all about reconciling. So checking our list of individual balances tie into our control account balance. So checking if our list of individual balances tie into meaning agree. With the control account balance. If there is an imbalance, then this must be investigated. So it's all about this word imbalance, of course. The main discrepancies, the reasons for differences, are as follows. Casting errors in the day book. Casting simply means adding mistakes. Adding mistakes. Posting errors, e.g., on the wrong side. You put it on the wrong side of the account. A one-sided contra, basically you forgot to finish the double entry. An entry that has been made in the individual account but not in the control account. So the individual account is for a customer but not in the control account. Now that could cause a problem, of course. An entry being omitted from the control account. So that's a straightforward omission. For example, you forgot the cash received. Let's say, e.g., you forgot to enter the cash received. So there you are. The concept of the control account. So may I explain that once more? The purchase day book, for example, is a list of individual purchase invoices, what you purchased on credit from your suppliers. The total of the purchase day book goes to the control account, the payables control account, obviously onto the credit side, because the suppliers are your liability, you have to pay them. Whereas individually, each little purchase invoice goes into these little T accounts. And periodically, every now and then, they are added up and reconciled. And the exam is all about the fact that they sometimes don't reconcile. Though, let's have a look at our example 4 to see what it says. If you remember, recently we were doing examples 1, 2, and 3. So ahead of us, we've got examples 4, 5, 6, and 7. So with 7 examples, you should really sail through that exam comfortably. So here we are. At the financial year end, 31st December 2007, a company called Explorer Rainwear had a balance on the payables control account of $22,550. Now, may I ask you a question, please? Is that $22,550 a debit balance or a credit balance? Clearly, it is a credit balance. I'm going to say here credit. The balance on the purchase ledger was $20,000. Now, the purchase ledger, of course, are suppliers. $20,650. So there is a difference, is there not? This one here is 20,650. So that difference is something like 1,900. So let's have a look at this. The payables control account stands at 22,550, whereas the supplier's ledgers they add up to 20,650, the individual ledger accounts. So as you can see, if you compare those two, that difference is something like 1,900. And that difference is what you and I are trying to reconcile. So here we are. We've got 5 points. It says, after these adjustments are made, the control account should balance. Let me show you how this works. An invoice of 1,200 had been omitted from the control account. So what we do is simply put it onto the credit side of the control account, of course. The purchase daybook was overstated by 1,000. So to my mind, that is too much of a credit went to the credit side of the control account. Remember, the purchase daybook was added up, and what's happened here is when they added it up to the extent of 1,000 too much. And because that ends up on the credit side of the payables control account, being a liability, remember, suppliers we owe money to, because it goes on to the credit side, what's happened here, it's been overstated by 1,000. So we've got to correct it, of course. Goods returned of 1,590 had not been recorded in the control account. So clearly we have to record it. It's as easy as that. Discounts received of 10 had not been posted to the control account. So I'm going to write that in. To control account. So quite simply we have to do so. Discounts received, of course, will reduce the amount that we owe our suppliers. So that goes on to the debit side. Contra entries of 500 need to be recorded in the control account. A contra quite simply means the supplier is also acting as our customer. So if we sold goods to the customer and they haven't paid us, but we also bought goods from the same person, but this time wearing the hat of a supplier, what we do quite simply is to cancel them. So it's a very, very easy point. But the word contra, just an old-fashioned way of saying cancelled because it's inter-account. After these adjustments are made, the control account should balance. Let's see if it does. So the basic idea, of course, is the individual, might just write in a slightly different style. So the individual T accounts are posted up from the books of prime entry and periodically reconciled to the control account, which has been posted up in total terms, as I explained earlier. So here we have example 4. On page 52. Explorer rainwear. Explorer rainwear. Now, the first thing to ask yourself is, where are the errors located? And clearly all 5 of these errors are in the control account. A little later we'll see examples where they could be in either place. But here they all seem to be in the control account area. So I suppose my main concern is to do a nice big payables control account, which ends up, of course, in the statement of financial position. So let's do so. The control account then is called the payables control account. So I'm going to write that down. Payables control account. Debits, credits, dollar signs, that kind of thing. Make it look smart. Payables control account, would that be suppliers? So I'll say suppliers, therefore a liability, therefore obviously credit balance, therefore should be a credit balance eventually. So let's make a start. It says there the payables control account is 22,550. So I suppose I better put that onto the credit side. So the year end is December 2007. So let's say 31st of December. On this side as well, 31st of December. The unadjusted balance brought down is 22,550, all as per question. Somewhere else we have the total of the purchase ledgers, the suppliers' accounts. I'm not too bothered about that. It seems like all 5 of these items affect the control accounts. As long as I get the control account corrected, it will reconcile. That's the idea. So let's make a start with the first one. An invoice of 1,200 had been omitted from the control account. An item of 1,200. So if it's been omitted, I suppose I better bring it in. So here we are. We're going to say omission invoice omitted, obviously now corrected, 1,200 on this side. Right, let's press on. Here comes the second one. So every time you do something, you tick it off, or at least mentally do so when you're looking at the screen. The purchase day book total was overstated by 1,000. So too much went to the credit side by 1,000. So it's overstated. So don't forget the purchase day book is added up, and the total is posted to the purchase or payables control account, I should say. It's overstated by 1,000. Too much went to the credit side of the control account. If too much went to the credit side earlier, how do we correct it? You're right, you've got to put it on the debit side. And that's exactly what I'm about to do. So let's say 1,000 credit side overstated, overposted, something like that, 1,000. Think about it. If your credit side is too much, if I put that on the debit side, we should be in the clear that the extra 1,000 is now eaten up. And so we come to item number 3. Goods returned of 1590 had not been recorded in the control account. Does this mean we've sold goods to our... In this case, in fact, they have sold to us. We have bought. So we have bought, and so we're returning back to them. So that kind of adjustment of 1590 simply means the items on the credit side are overstated. So what I need to do is to put this onto the debit side to record the fact that we have returned the goods. So I'll say ditto, and I'll just say returns omission 1590. So that's the third item. The fourth item then, discounts received of 10 had not been posted to the control account. So what do? Post it. So onto the debit side it goes. We have there an omission of a discount. Discount omitted, omission, now corrected. That's a discount received, of course. So we receive a discount from the supplier. So clearly that should be on the debit side, because that means to that extent we don't have to pay them. What's on the credit side represents our liability. So if you put something on the debit side, it means to that extent we don't have to pay them. Very, very easy, really. So that's 4 items done. We now come to the 5th. Contra entries of 500 need to be recorded in the control account. So one has to assume, of course, that the other side of the account must be fine. So the control account, which enters the trial balance, of course, the contra entries of 500 need to be recorded. So if it's a cancelling entry, and this is mainly a credit item, I suppose I better put it on the debit side to get rid of it. So we're going to say the receivables control account is to be contra, a little C sign like that, 500. So if I was doing a receivables control account, that 500, which here is on the debit side, in the receivable control account, of course, it'll turn up as a credit item. And that's how the two sides would reconcile, or the two accounts would reconcile. Now, quick check, have we entered everything? In the exam, especially under a bit of time pressure, I would suggest either doing it very slowly, carefully, first time, or stopping and checking quickly. Now, even though some of these questions are given 2 marks, it doesn't matter if you have to spend a bit more time on something like this, because some other questions, which may be 2 marks, even 1 mark, you can do in the space of 10 seconds, 15 seconds. So don't worry about it, as long as you have an overall control over the 2 hours passing. So that's the only thing. I've tried those exams myself, and it's quite, you feel quite under pressure with the seconds ticking away and the questions taking a long time to do. But it's a very fair exam. ACC are very careful to pre-test these exams to make sure that they are fair and that there's no ambiguity in the questions, and the time allocation over the 2 hours is a fair test. So if something like this takes a few extra minutes, it doesn't matter. It will be smaller than this probably, but I'm doing quite comprehensive questions to get you well prepared for that exam. So what shall I do next? I suppose I'll check to see whether the credit side or the debit side is heavier. Here, comfortably, it's the credit side. So I'll add up the credit side and put the heavier side, which is the credit side total, onto the debit side. Meanwhile, I would have added up the debit side, and the difference between that total and the total of the credit, as you well know, is the closing balance. And that is the action I'm going to demonstrate now. So let's leave a bit of space. Here we are. The credit side looks comfortably heavier at 23,750, which I'm then going to put on to the lighter side. Meanwhile, the lighter side stands at 3,100. So I'll do that in pencil, so to speak, 3,100. I'll then compare that to the 23,750, and the difference is 20,650. So let's say the adjusted balance therefore equals 20,650. Have a quick look at the total as per the purchase ledgers. It's comfortable to see that it does reconcile. What I might do, in fact, to make it look a little bit more complete, I'll bring that balance down, let's say on the 1st of January the next year. And so I'll say the opening balance. This is carried down, this one brought down. The one above is carried down, the one below is brought down. This is accounting convention. And that's 20,650. Notice it is a credit balance. And we're relieved to notice as well that the balance as per the list, the total of the balances as per the list, actually comes to the same figure. So let's write that out. Total as per list, 20,650. List of credit balances. And of course you can see that the two reconcile. Very easy exercise. But it all comes back to understanding that the control account is posted in total, whereas the individual accounts are posted individually, item by item. You see, the logic is the control account controls the asset, the liability, in this case a liability that the company has to its suppliers. So that's the figure that enters the trial balance. Whereas in the background, you need to know how much you owe these individual suppliers. You can't give the wrong amount of money to the wrong supplier. That wouldn't work. There'd be utter confusion. So that the reason why you do the control account is so you have control as the company, whereas the individual accounts are maintained separately so that you know how much to pay these people. That's the reason why it's done. But of course the side issue is that every now and then you can reconcile it. Usually done by two different people, ideally, sometimes referred to as internal check, by me doing my little T accounts as best I can, and that's my province, that's my area of responsibility, and someone else doing the control account, by that person, him or her, doing that as well as they can, and me doing as well as I can on my little area. The two, if they agree, obviously it means that both are right, usually. So there you are. That's your example number 5. Example number 4, indeed. I'd like very much to move on to example number 5 next, which is much the same kind of thing, though maybe a slightly harder question. So please turn to page 53 as you see a bit more on all of this. Example 5, called Hippo Manufacturing. And Hippo had the following balances on their payables, receivables accounts. Now, would you agree that payables are credits and receivables are debits? Do be careful of that. So the credits, payables, near that, would you kindly say credits, and then near receivables, would you say debits? In fact, if I turn to that, it might help me to explain how all this is working. So if you turn, please, to that question, or I shall do that on the screen. I can then explain in a bit more detail how everything works. So here we are. Here's our friend Hippo. So near the word payables, you've just said credit. Near receivables, you've no doubt said debit. Reason, credit, of course, is a liability, whereas debit, of course, is an asset. And these are all dollars, etc. Right, the credit sales. Given, cash sales, etc. And then as you continue down the question, they give you some balances. Those are opening balances. And then there are some provisions for doubtful debts and bad debts. Be careful of those items. Compute the receivables and payables control account and extract the closing balances for the financial year end. That's the challenge from the question. So receivables and payables. Now, be careful of this. I might do payables first, because that would be very similar to the question that we've just done. Before we do that, one of the big challenges is to run through an exercise like this, deciding whether something is an item that belongs to the receivables control or the payables control. So that's the first thing. So let's run through this. A credit sale obviously is a receivables control account item, and it should go on to the debit side, I'd imagine. The cash sales is a trick, examination trick. Ignore. Any other cash purchases, ignore. Because we're only dealing with credit items. You remember I said that at the start of this session. Credit purchases, of course, go to the payables control. So I'm quite happy to say PCA. And I'd imagine that should be on the credit side. So these two items are not acceptable cash purchases. That's where it's wrong. You're only dealing with credit items. Right, returns inwards, 17,000. That has something to do with the receivables control. And because it's a return inward, I'd imagine it should go on to the credit side. Returns outwards, you'd imagine, is the other way around, PCA. And that should go, returns outwards, that should go on to the debit side, because you're trying to cancel what is essentially a credit type of item. Discounts allowed, similarly, discounts allowed, by us to customers. So I'll just say by us to customers, or receivables. So that obviously goes to the receivables control, RCA, and that should be a credit item. Then you have discounts received, presumably by us, from suppliers or payables, and that should be a purchase type item or payables control, and that should be a debit item. And so it goes on. Let's try another one. Irrecoverable debts is simply a bad debt. That goes to the receivables control as a credit item. Payments made to payables. Payables are suppliers. So that goes to the suppliers accounts or the payables control account. And presumably if you've paid it, it needs to be debited. Cash received from receivables. Cash received from receivables, I presume, goes to the receivables control, and it should be on the credit side because you've received cash. Then comes the contras, 17,500. Both of them are both RCA and PCA. So PCA and RCA. So the purchases control or the payables control should be debited. This one should be credited, and thereby you cancel, you see. So both of those should be reflected 17.5. That's what contra means. It's cancelled. The balances given to you lower down the page appear to be opening balances. So do be careful of the date. These are opening balances. Be very, very careful with that. The only trick point, oh, by the way, are these payable control items or are they receivable control items? That's the other issue, of course. And needless to say, the first one is payable control, and this, of course, is a receivable control. And clearly the first one is a credit, this one is a debit, and so it goes on. Careful. Provision for doubtful debt. The fact that it's a provision disqualifies it immediately. It's irrelevant to a receivable control account till actually written off. Till actually written off. Similarly, the bad debt provision is to be maintained at a certain figure. Again, it's a provision irrelevant to control accounts, which in this case, of course, is the RCA. Do be careful of that item. You're then asked to do the receivables and payables control accounts. I'm going to decide, I think, since we've just been talking about payables, I'm going to do this first, and then I shall do this second, on the grounds that we've just been doing something on payables. So let's make a start then in our own class notes, how we do something like this. Now we have to be extremely careful here, because clearly the payables control must not be mixed up with the receivables control. The only time it's in any way connected is when we have this item called contra. So let's make a start. Very easy, really, if you're careful. The question called Hippo we'll start with the payables control account, I'll just write in a slightly brighter colour, make it a bit easier for you to see, perhaps. So that's one account. And then lower down the page, I'm going to set up my next one, and that, of course, is the second of the two, which is the receivables control account. So I'll do that lower down here. Nice big account again. Receivables control. Right, receivables control, is that going to be a debit or a credit? Essentially. You're right, it's a debit. So I'm going to underline that to remind myself. Credit, of course. All dollars. You might have the odd credit, naturally, for slightly odd items. Though there are quite a few credits, you mustn't discount them completely. Plenty of space. If you're doing the computer-based exam, it's all your own private workings. But even so, you've got to give yourself a chance by laying it all out. So here we are. Let's write this out as the payables control. Payables control account. Debit credit. And as you'd imagine, it's essentially a credit item. So we're on our way. Let's see if we can attack this question. Maybe an idea to concentrate on one thing at a time. If you just post items to your control account for payables, you feel that you are in some kind, you're in charge of the question. Because all you need to do is to put one item on the wrong account, and it's quite possible that both of them may be wrong, and that'd be a terrible waste of a couple of marks. So let's begin the whole operation. Looking at the question proper, I can see some opening balances of 53,500. So I'll start with that. The 1st of July 2005 or whatever it is. The opening balance then is 53,500. So tick that item off. I'll keep away from even touching the receivables control for a few more minutes. So that 53,500 is on the credit side. That's good. We then come back to our question proper, and we run through those various items. So I'm going to keep away from anything that's RCA, concentrating on PCA. Credit purchases, that goes to the payables control, 300. So I'm going to put that in. I'll say as at the end of the year, which happens to be the 30th of June. So I'll say 2006, 30th of June. Credit purchases. Purchases on credit. Purchases on credit, 300,000. Tick it off. Next item. There's another PCA coming up a bit lower down. This time it's returns outwards of 14,000. So that becomes my next concern. All these are 2006, 30th of June, returns outwards, and that's 14,000. Tick it off, you've dealt with it. What else is there? The next one, of course, is the discounts received, 12,000 PCA. So discounts received of 12,000. So obviously that will appear on this side. 12,000 discounts received. And that should be 12,000 on that side. So you can tick that one off as well. Let's move on. The irrecoverable debts, keep away from that. Payments made to payables. Obviously, you credit your cash and you debit this, 263.1. And so you have your payments in cash. Now, do be careful. These are not cash purchases. That's quite a different issue. This is where you have paid your suppliers, your credit suppliers, suppliers who sold you goods on credit, you bought on credit. It is a payment to those people. So the total for the year is 263,100. So obviously it appears on the debit side to enable you to cancel some of that 300,000 on the credit side. Indeed, I'm sure the 263,100 cancels some of the opening balance of 53,500. So in a sense, you've got something like 353,500 on the credit side, and to some extent you're paying that off by debiting 263,100 onto the debit side. So that's the logic, that's the logical flow. And so that's the end of that little item. Then comes the intriguing contra. This is where both the PCA and the RCA are affected. So what I need to do, I suppose, is to put the 17,500 onto the debit side, and I'll call that a contra with a little C sign. And I need to cancel some of the RCA value. This is, of course, the PCA. So I'll say RCA. Strictly, that is the double entry. And so that becomes the end of the year item. Now, clearly, I'm going to keep away from the RCA items for a few more minutes as we attempt to reconcile, add up, or at least add up these figures. So I'm going to leave 2 or 3 lines as always and tidy up. At a guess, which one do you think will be heavier? This is, after all, let's go have a look, the PCA, which is all about the credit side. So I'd imagine the credit side will be heavier, and indeed it clearly is in this question. So 353,500 is on this side. If I put the heavier side onto the lighter side, and this is 306,000 so far, 0.600. So far, 306,600, adding up the debit side. If you compare that to what you had on the credit side, the difference is some 46,900. That, of course, is the closing balance. Closing balance carried down. Needless to say, that comes down to this side, and so that'll be on the first day of the following year, financial year that is, the accounting year end, you have a balance brought down, which happens to be the opening balance. And so that is 46,900. It's a good thing to bring the balance down because actually it is a credit item, as you can now see more clearly. You see it is a credit item. Okay, so not too bad. Let's turn our attention, however, to the last bit of this question, and this, of course, is the receivables control, which is down here somewhere. Here we are. The opening balance, as we saw earlier, towards the end of the question, is a 51,500 which clearly is a debit item. So I'm going to put that on this side. 2005, 1st of July, opening balance brought down, you see. It's very easy. 51,500. We then painstakingly work our way through the question. The first item, the credit sale of 450,000, obviously adds to this figure. 450,000. So I'll just say sales on credit, credit sale, something like that. And the figure, of course, 30th of June, the date 2006. We then turn back to our question, and we constantly do this, keep ticking it off as you go along. The next item, of course, is the items that we haven't ticked. The next RCA is returns inwards of 17,000. If you return something inwards, or if someone returns it to you, it comes into your company. Clearly, we need to reduce the amount that the customer owes us to that extent. So we're going to say returns inwards account 17,000. Strictly, if you want to think of the double entry, that credit that we've just entered is actually debited to the returns inward account, which eventually ends up in the income statement. So the debit enters the income statement. Here, of course, you're putting through the second half of the entry, so that the whole thing makes sense as a logical piece of logic. All right, let's try the next exercise, the next little item. We have the returns inwards under control. The next one I can see is the discounts allowed by us to customers. So discounts allowed will end up on the same side because you have deducted the amount they owe us by a little bit, reduced it. So discounts allowed. Obviously, you can't allow a discount to your suppliers. That would be patently unfair and faintly ridiculous. So what we're going to say is discounts allowed is something that you have the power to allow to your customers. Whereas if a supplier decides to give you a discount, that is a discount that you will receive. And we covered that, of course, on the previous account. So let's tick off the 11,000 as we come to the end of the question. A couple more items. The discounts received we've dealt with. Irrecoverable debts are bad debts, basically. So 2,500 bad debts. I'm going to put that onto this side. And so you have these irrecoverable or bad debts standing at 2,500. So let's move this account up a little bit so we can see how it all fits in. Irrecoverable debts, 2,500. What else is there? Payments made to payables, we've dealt with that. Cash received from receivables is 438,580. So I suppose that ought to go onto the credit side once more. Quite a large figure. 438,580. And so that's cash received. And that's on the credit side. So you can tick that one off as well. And then the inevitable contra, which must end up on this side. And so we're going to say that is a contra, though strictly speaking I should be saying that's a PCA type of item. Purchase control account or payables control account. That's the big contra, and that cancels, as you'd imagine. A few minutes ago, of course, we put that onto the debit side of the PCA, so it's on the credit side now of the RCA. And between the two, of course, because they're cancelled, remember the concept behind this? The customer earlier was acting as a supplier, and rather than writing out a check to that person and him or her giving us a check back, we just say, let's call it quits, let's cancel it, email or phone call or whatever it might be. And so the two are just, it's administratively much easier and less costly and time consuming. Right, now which side is heavier? As you'd imagine, we were saying that this is likely to be a bigger on the debit side. So it is, after all, a debit account. So we're going to leave a few lines, as always, and see if we can add it all up. So here we are. I'll rule off the two sides. Now, the debit side looks heavier at 501,000. Let me just check, make sure all that adds up nicely. Yes, 501,500 is the answer. So I'll put that onto the debit side. It's a stepping stone to the answer, I should say. And that 501,500 is on that side. Clearly, as you work towards the total, this figure is 486,580. 486,580. And the difference between the two sides, the closing balance carried down, is 14,920, and that comes along to this side, 14,920, and that is the balance brought down, which happens to be the opening to the new year. So it just comes down like that, and that's, of course, the 1st of July, 2006. And so there you have it, a comprehensive test of whether you can distinguish between the payables control and the receivables control, whether you know your debits from your credits, and if you could keep away, of course, from our cash purchases and cash sales. That's a bit of a trick. And of course, the doubtful debt balances, provisions, are not entered until they are written off. So, a very comprehensive couple of questions. The examiner likes this area very much. So what I'd like you to do is to stop the tape now and rework those questions if you can, or if you do so in a few days' time, that'd be even better. So this is where I would like to pause as we practice this exercise ourselves.